Are you curious why everyone's been talking about DataDog stock, or maybe not everyone, but a lot of market investors have been talking about DataDog stock? So, why is that? I'm going to answer that question in this video by going through a question and answer session that DataDog CEO and CFO held with Wall Street investors. That Q&A session is going to give you insights into what's going on from a first person perspective, an inside look at what's going on at Datadog, and that can inform you why so many stock market investors are interested in Datadog stock. So let's get right into that. So the first question comes from Mark Murphy from JP Morgan asking management to comment on the AWS infrastructure monitoring portion of the business specifically. So Datadog generates a meaningful percentage of its revenue from its clients that use AWS. So its own business is correlated to how AWS is doing. So the CEO jumps in and says, there isn't a one-to-one mapping between what happens on the revenue side for cloud providers and what we see on the infrastructure side on our end, but we are seeing some of the same trends where AWS growth slowed throughout the fourth quarter. So AWS slowed in its latest quarter, and Datadog saw its revenue growth slow in its latest quarter. So they are seeing similar trends, but it's not like a one for one trend, right? Where if AWS slows by 1%, then Datadog slows by 1%. No, it's not that exact of a relationship, but they do follow the similar trends is what the management is what the CEO is saying. And he goes on to say, I think the story they're also seeing optimization from some of the same customers, and which that means their largest customers in our and on our end we expect that optimization to continue throughout the year. So what is optimization code for? Optimization is management speak for their clients are reducing costs. They're cost cutting, right? They're trying to optimize the amount they are spending with cloud providers, and that means they're cutting costs, trying to utilize their services more fully instead of spend more in adding new services, right? And so that's a headwind for AWS, that's a headwind for Datadog, and that's been a headwind for many of the cloud security providers, cybersecurity providers, and many in the service industry because big companies are trying to reduce costs, right? Ever since the middle of 2022, and maybe even earlier than that, there's been a focus on costs, on profitable growth, on cash flow. And so that's been impacting companies, and Datadog saying that they are also impacted negatively from this trend. Mark Murphy wants to follow up and say and ask, do you see an increase in consolidation opportunities and maybe just a broadening view where Datadog as the converged observability leader in wanting to consolidate in that direction? So this has been a major theme also is that big companies are, they've got, maybe six or seven cloud security providers or cybersecurity providers for each unique type of service, and they've been trying to say look for companies that can provide a one-stop shop, right? One company that can provide all of these services that they need, and so that industry consolidation has been a major theme. The CFO is jumping in to say that they continue to see greenfield and new projects, new workloads being the majority of the driver, but they have seen over the quarters, and we have talked about some of them in our prepared remarks, of consolidation opportunities. So more so they're seeing new projects, new workloads instead of consolidation for DataDog. So DataDog is a bit of an outlier in that it's not seeing very many consolidation opportunities happen already. Some of the other cybersecurity providers like CrowdStrike and Palo Alto Networks, that's been a major theme for them in recent quarters is they've captured the benefit of consolidation. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the CEO jumping in to add, like, we're still in early in cloud migration and digital transformation, and we see no slowdown from companies going from their legacy IT services to this new world. So that's good news. The next question comes from Sanjit Singh from Morgan Stanley saying, do you feel in some sense Datadog gets viewed by customers as sort of a Lamborghini type observability solution, meaning that you are in terms of customers may not need all the bells and whistles that a 17 product portfolio like Datadog can provide? So what Morgan Stanley is trying to get at is, are you maybe offering services that are too high grade, too high quality in term compared to what the market is looking for? Maybe the market's not looking for the Lamborghini of observability solutions like Datadog provides. Maybe the market is looking for a more cost conscious solution, right? A more, bare bones solution, not the whole, you know, 17 product portfolio that Datadog provides. And so the CEO jumps on and says, hey, I don't think we position ourselves as the Lamborghini. Sure, we've been investing heavily in product innovation, but what we see in the current environment is that it's actually helping us to consolidate deals. It's still early in that because many of those products are early in their life cycle, so they may not be applicable to every single type of customer and every single type of situation. So it's not that these products are too premium per se, but it's just that they haven't found their fit in the market just yet. And the CEO does think that eventually they will find the fit, but just right now they just haven't found what these new product with these new solutions, it may not be a good fit for every single customer in every single type of situation. So they're more of a niche product rather than a one size fits all product. And so it's not that it's too premium, it's just that it's focused on a more narrow segment of the customer base. And I'll end with this last question and answer here. And Sanjit is just doing a follow up on the larger customers who are seeing their usage trends slow more than smaller customers. So relative to the commitment, how are you guys handling that? So, if like we talked about earlier, some of the larger customers, larger businesses are slowing down their spending because they're looking to reduce costs and increase profitability. And Sanjit wants to know how Datadog is responding to that. So the CEO saying, we always want to partner with customers and build a long-term relationship. We've had some customers that have run into significant headwinds where their own businesses have contracted quite a bit. And in those situations, we always work with them to structure contracts and make sure we get a better outcome. That's interesting. So what Datadog is saying is that, hey, if we have a client that we expect to be a long-term customer and has been a long-term customer, if they experience some headwinds, we're going to work with them, right? We're going to maybe say, hey, you don't have to pay us this quarter. You can pay us 3 months from now, or you could pay us 6 months from now. Or maybe you still pay us this quarter, but we'll spread out your payment over the next 2 years. So lower your per month bill, but spread it out over a longer period, right? So working with their clients to try and find a solution that still has them buying Datadog's services, but maybe extending the payment terms, maybe delaying payment amounts, and working with them to keep them as a customer work with them through these difficult times so that when things return back to normal and their client businesses grow, they can come back and stick with DataDog for the long term and not now be with a different provider. All right, so um, I hope this video has shed some insight into um, the happenings inside DataDog and why so many investors are interested in DataDog stock and talking about DataDog stock. They're certainly one of the fastest growing companies in the market today, and they're doing so at a very healthy free cash flow margin of above 20%. And so investors are interested in this type of company because it's hard to find growth at over 40% like Datadog is providing, with a combination of over 20% free cash flow margin. So this combination that Datadog provides, and also operating in the cybersecurity industry or the cloud computing, cloud security, cloud observability industry, that's expected to grow over the next decade. So Datadog has excellent potential, making excellent progress, and it's no surprise why the stock market is talking about Datadog stock. All right, so that's all I've got for this video. And if you like this one, I'm going to link you to a couple of videos that I made that I think you will enjoy. So please click on one of those and I'll see you over there. Thank you so much for watching.